Retail versus corporate versus digital banking. Retail banking usually serves individuals at high volume. Corporate banking serves businesses with high value transactions. Digital banking is technology driven delivery across both. Let's understand each banking in detail. So, retail banking, the customers are the individual customers, salaried employees, students, and households. And the services that the bank provides to them are savings and current accounts, personal loans, home loans, debit or credit cards, and fixed deposit. So let's consider the whole flow. Firstly, we'll open up the account for the salaried employee or the household or student. Then they will either deposit or withdraw money from the account. They will use services such as cards and mobile banking for the payments or any other services such as check. And then they might be applying for the loans as well. Corporate banking. So the customers are the small businesses, large corporations, and government entities. And the services that the bank provides to them are business loans and credit lines, trade finance. So, trade finance is basically when the bank sits between the buyer and the seller. And the bank ensures that if the documents sent by the seller and the goods are appropriate, then the payment would be transferred from the buyer to the seller. Cash management services are basically the services for the business for making up the payments. So there are cases wherein the business needs to do the auto payments to either the salaried employees, to the vendors. So the bank offer those services to the businesses. Treasury and forex services. Treasury is basically investment in various products such as bonds, fixed deposits, mutual funds, and forex services. So forex services is basically if the trade is happening in between different countries and so therefore the currency would be different. So if and the payment is usually made when the goods have been shipped, not at the time when the deal is being closed. And if any party, either the buyer or the seller, wants to fix up the price, they could book a certain price for the currency exchange, and the buyer needs to pay the seller only at that fixed amount. Digital banking. So, so the customers would be the retail and the corporates, and the services that digital banking provides to the customers are online account opening, digital payments such as UPI cards, wallets, instant loans, real time notifications. The main objective of the digital banking is speed plus convenience plus automations. So, loan approval in minutes, instant UPI transfers are some of the key objective of the digital banking. Let's understand by an example. So, services is loan offering. So, for retail banking, the loan would be offered to the individuals. It would be high volume and streamlined approval process. Corporate banking, so loan would be offered based on the capital loan and financial evaluation of the company, relationship managed would be evaluated while giving up the loan to the corporate. Digital banking, online loan application, same loan products delivered instantly via mobile or web application. So focus area for retail would be user experience, high volume flows. These are the focus areas for BA. So retail, it would be user experience and high volume flows. Corporate, it would be complex workflows, financial risk and approvals. And for digital banking, it would be APIs, integrations, real time processing, such as UPI payment flow.